Hi, my name is Peter Garnry and I'm the equity strategist here at Saxo Bank. We are here hours ahead of the earnings releases from Morgan Chase and Goldman Sachs, which will be the first two most important earnings releases in this fourth quarter 2012 earnings season. And this is probably as good as it gets on Wall Street. The two banks are major players. Goldman Sachs is a major player in capital markets predominantly, and Morgan Chase is a full-blown supermarket, financial supermarket, which has asset management, mortgage business, credit cards business. So that's a little bit more diverse play. So what do we have to look for these earnings? We start with Goldman Sachs. You can see here in this chart actually that the red line is the changes in earnings estimates for this quarter. So you can see it declined quite rapidly in the first half of the year, and then in the second half of the year you saw this 20% increase in earnings expectations as you saw rising stock markets and slightly increased market activity in the second half of the year. And a theme to look for here is actually that the stock price moved ahead of the changes in the earnings estimates, and you can see this last couple of 2 weeks we have seen a huge jump in the earnings expectations for Goldman Sachs. So I think the upside surprise for today's earnings release in Goldman Sachs has slightly been limited due to this huge jump, and the street is looking for 365 in earnings per share for Goldman Sachs. And what will be key to look at is how is the market activity been for the fourth quarter, and how is the outlook for the first and the second quarter, and also the merger and acquisition, which is a big business for Goldman Sachs. So we want to tend to look for these outlooks, and hopefully management is more optimistic going into this new year. If we look at JP Morgan, it's a little bit different story. You can see it over on this screen here. You had the same move at Goldman Sachs where the earnings estimates for this fourth quarter tanked, but it was for a different reason. The reason here was the London Well, which I assume you have heard about, with this rogue trader in London that lost the bank $6 billion. And you saw this sharp decline in earnings expectation, also in the share price, almost 25%. And then it recovered again. But the recovery compared to Goldman Sachs was slower, and was not until the third quarter was announced. You can see here on the chart, you see a huge spike in the changes in expectations for this quarter, and that was due to, in the third quarter, they had good results, and the CEO, Jamie Dimon, went out saying that they had contained the losses, and it would be this fixed amount around $6 billion. And as soon as the street got this new information, they could readjust the expectations for the fourth quarter, and you can see they have come up, but now being flat in the last couple of months. And if you compare that to the changes in the share price over the last 3 months, you have seen the opposite. So flat expectations, but share prices have jumped quite a bit. So I would say, comparing Goldman to JP Morgan, I think the upside surprise to today's earnings release are biggest for JP Morgan Chase. And there could be this positive tailwind in the mortgage business. We still saw Wells Fargo last week coming out with results on their mortgage business, and it showed pretty good improvement overall. And you have the credit card business, which also is having a positive momentum. So Jamie Dimon will likely go out being more, I expect at least, be more positive for 2013. He said in the third quarter that he had this famous phrase that the US housing market seems to have turned a corner, and we have got a lot of evidence coming out from the housing market that might be true. So we will look to that as well. And then I'll be commenting on these two earnings releases. You will have JP Morgan Chase out first at 12 GMT, and then Goldman Sachs 30 minutes later at 12:30, and I'll be commenting live on trading floor. So stay tuned.